Get ready to pedal your way into the future. With VirZoom, fitness just got a whole lot more immersive.
Next Pitch TV showcases the most innovative equity crowdfunding campaigns for the verdict of the crowd.
Behind this innovative venture is Eric Janchen, a visionary on a mission to transform fitness from a chore into an exhilarating adventure.
And a very good morning, Eric, and welcome to Next Pitch TV, where we showcase the most innovative equity crowdfunding campaigns for the verdict of the crowd. So I was amazed in my research to see actually that you, or VirZoom, I should say, is no stranger to equity crowdfunding. In fact, I think you had your first campaign back in 2017, if I see that correctly. So
that's right. We have participated in 5 crowdfunding campaigns in the past, and including Seed Invest, Refunder, Net Capital. So we're very well versed in
you've made the rounds literally, and now you're on Dealmaker. So yes. It's kind of fascinating to the extent that the other platforms like WeFunder, as you know, have the platform where they showcase all of the various campaigns, unlike Dealmaker, which gives you your unique campaign page, I guess. So it's quite an interesting development there for the industry, I mean. But let me first of all ask you, for our audience benefit, obviously, what exactly is VirZoom about and how did it come about?
Well, first of all, thank you so much for having me here. I appreciate the opportunity to address your audience. And very excited, of course, always to talk about VirZoom, particularly since we're at a very important kind of inflection point for our business after we were founded 9 years ago, and we've been in this industry shipping products since 2016, and have learned a great deal along the way. And we've been developing, the way to think about VirZoom is we're kind of a hybrid game studio and technology company. So like any studio that builds games and applications, we have a very strong team. These are a group of very senior developers and engineers and artists who were involved very important levels. For example, my co-founder and CTO, Eric Malfi, was the chief architect on games like, you probably heard of Guitar, Dance Central, Rock Bands. Yeah, some of these are billion-dollar successes, really huge titles. And so they're very experienced in developing games that are extremely successful, that can scale. What's different about VirZoom is that we had to develop some very special technology in order to develop the kinds of applications that we wanted to, because of the limitations of the existing tools in the virtuality world, development world. And my very unusual CTO was able to do that. And his background is undergraduate engineering degrees from Virginia Tech, graduate from MIT, spent some time in the defense industry doing flight sims and robotics, but then spent 20 years in the game industry as a chief architect, writing game engines and at very, managing large teams of developers. So super experienced, very versatile. And the problem that we needed to solve, because our vision of what virtual reality should be is it should be real, not artificial, right? So the way you move around typically in virtual reality worlds, and one of the problems that I think that new users have with it is they put on a headset and they start playing these apps and games, and the first thing they notice is they're not moving through the world the way they do in the real world. You're teleporting, you're pointing at something, and you go over there, and that's not how we move in the real world. I don't point at something and cross the street, and there I am. I have to walk across the street. And the reason for that is that no one had quite figured out a way to let you move continuously through virtual worlds and turn without making people sick. So that was the problem that we decided that we really had to solve to do what we wanted to do to fulfill our vision of what we think the promise of virtual reality is. And we did, and we came up with this very novel technology. We received the first patent in 2019, and the second patent was filed for in 2022 and was recently published that builds on the first one. And the best way to describe it, it's very technical to describe to convey exactly how it works. But one way you can think about it is if you're riding a bicycle or a motorcycle and you tend to go where you look, that's just the way our brains are wired. So we take advantage of that mechanic, that aspect of the way our brains work, and apply it to VR. So essentially we're coordinating your virtual gaze in your head, and you're causing yourself to turn with your own actions. And the effect that it has is making it feel completely natural to turn and move in through large virtual worlds very comfortably. And we have a number of applications for this. But the other thing I should mention is it's part of our philosophy as a company that we want to improve the health and well-being of our users. So we develop games that deliver a range of different kinds of physical activity, from modest to really extreme. So VZ Fit is a fitness app, and it uses Google Street View as the background, and you can pedal or by doing a number of motions can propel yourself through the actual Street View, which is 40 million miles of roads mapped by Google of the entire world. So it's endless variety of content. You can go where you want. We have hundreds of curated rides, and we have literally I think we're up to 5,000 or 6,000 rides that have been curated by our users. So built by the crowd, if you will. And they're all rated, and so you can pick any of these thousands of places to go. And we have people that ride across Japan, or they ride across Europe, or they ride across the U.S. or South America. They take these very long trips, or you can take short trips. There's challenges, but it's a real workout. It's really designed for fitness.
Indeed, that's what I gather, that the real distinguishing factor, I suppose, is your focus on using virtual reality in conjunction with fitness. And I suppose making the whole experience that much more interesting, the way you just described, because of it becoming essentially a virtual trip. So,
well, when you engage people's bodies in addition to their minds, right, when they're playing something, it takes it to a whole different level. It's so much more immersive because you're causing the action to happen. If you're sitting in a chair and pushing around hand controller, little thumb controllers and buttons and stuff, you don't really have agency. You're not causing things to happen in the world. But here, it's much more like the real world, where you're causing, you're involved in activities, and the world is reacting to you, and it's a continuous kind of feedback loop. So the other thing, the most recent application of our technology, and the one we're most excited about, and it's really the focus of this current fundraising, is a new application that's called Fly, Explore the Earth. And it started off as a project that Google approached us to work on way back in 2018. And I won't go into the details of the technology that they wanted us to help them develop. But long story short, it was a bit early for them. We did develop an application, a prototype, and they loved it, but they said it was too early in the market. And then to deploy this technology that we had jointly developed, and they said, we'll be back, and they were back. They did come back 5 years later, last year. Wow. And now they have a commercially available version of that technology. So we dusted off our prototype and built it up into a commercial app and launched it, a minimum viable product version in December of last year. And then in June, launched a fully commercialized, highly polished app. And that is now on the what's called the Meta Horizon store, formerly known as the Meta Quest store. So the Meta Quest, of course, is the most popular virtual reality or extended reality headset out there. They enjoyed 90% market share by the end of 2023. And we focused entirely on that platform until recently. We launched on the Apple Vision Pro. So we also have Fly on the Apple Vision Pro, and it's doing extremely well. It's getting very well reviewed. And we're very excited to be expanding the range of different content platforms, and there'll be more of that this year too.
I congratulate you. That is fantastic. So, if I understand it correctly, basically your focus is largely or even entirely on the app development, as opposed to the physical Oculus equivalent, I guess, or Apple.
Yeah.
Is
We're not in the hardware business. We're in the content business.
Okay. I wasn't entirely sure of that. That's why I wanted to verify that.
Sure. Well, the hardware business is a tough business.
Oh, God, yes.
The supply chain, blah, blah, blah. The software business, also has its challenges, but and the kind of thing we do is technically extremely difficult. But we like to do the hard thing, because the hard thing is the thing that the other guy is going to have a hard time copying. So it produces real differentiation and barriers to entry by competitors. So let me describe Fly for you a little bit, because it uses, if you ever used Google Earth VR, say on your smartphone or on your desktop, Google Earth. So Google has taken aerial and satellite images and mapped all 196 million square miles of the Earth, and you can go anywhere you want. You can fly up into the stratosphere and go down and land in Tokyo or anywhere, any place you can think of. And the cities are extremely detailed. The way they've mapped those, they've extruded them into highly detailed 3D models.
In other words, a very realistic three-dimensional world in this case.
Yeah, you have to have Google's pockets to pull that kind of thing off. But
yes.
It took a lot of processing, I'm sure. But anyway, they produced this, and then they produced a VR version of this, 3D, in fully 3D. And that was the project that we worked on with back in 2018, which is to make an API to make this technology and this imagery available to a third party like us. So think of it this way: if you look at Google Earth on your smartphone or on your desktop, you're looking at a flat screen, and you're looking at 3D images, but it's displayed in 2D, right? It's just a thing. It's a window in front of you. In VR, it's the world all around you. It's the actual world that you're in. So you're flying between buildings in Tokyo and over them and up into the stratosphere and down over fly over the Atlantic Ocean in 10 seconds, because you go very high speed at high altitudes and drop
literally
down.
an additional dimension.
Yeah, it's and we really focused on, because of our motion controls, or our patented motion controls, very much on the flight experience. We wanted to make it feel like, if you've ever had a dream where you fly, it feels like that. So you're completely controlling your flight just by using your body motion. You're not pulling on all the triggers and so forth. So you feel totally in control of how you're flying, but using your body. So you're thinking about where you want to go, and you just go there. You can teleport also, of course, from one place to another. And there's music in the background. You can choose from many different kinds of stations. So this combined effect of just flying freely through any place in the world with whatever favorite music you want to play in the background it's quite an experience. It's really some of the feedback that we're getting from reviewers is, this is a system seller for Apple. It's a system seller for Meta. Well, we'll see. We just launched it. We're getting great reviews and selling quite well. So we'll see.
Now, since we are very much focused on equity crowdfunding, I'm curious, as we mentioned already, you've had plenty of experience. My first question in this regard is, why did you actually decide on using equity crowdfunding compared to angel VC money, for example?
Well, we have raised a significant amount of angel money. So the company was originally funded by myself and a group of angel investors that I've collected in my network over my career. So we started off raising 1.8 million. That kind of got us off the ground. And then we've continued to raise money from angels investors as well. Out of the roughly 16 million that we've raised, about 12 of that has come from angel investors. And some of these investors have invested 8, 9, 10 times, right, over and over again, because as we continue to progress, they're encouraged to continue to invest or support us as we reach the point that we're trying to get at right now, which was to everything. We really wanted everything to come together. So all this work we've done over the years, refining our technology, our ability to apply that technology to really compelling products that consumers want to buy, right? And the beginning of the more rapid growth phase of the extended reality industry, which is starting right now. So it had been kind of the meta show, right, for a long time. They had 90% market share. No. At the end of 2023, just Apple joined the fray in February of this year. Wow. And there are announcements there's a partnership between Google and Samsung to deliver a product reportedly later this year. Microsoft just threw their hat in the ring. So all these very large companies are now, have observed Meta's success selling this standalone XR product, and they don't want to get left out. So they're all jumping in. And it's starting to look like a repeat of what we saw with the smartphone, almost 20 years ago, where all these major players want to get in, are jumping into the market to be part of this new computing paradigm that will be the replacement for the smartphone within probably 5 to 8 years would be my guess.
Well, I mean, definitely exciting times, to be sure. But given that you've raised so much in the conventional manner, which kind of surprises me in that, at least in the past, until the special purpose vehicles became available, a lot of angel and especially VC would sort of say, what, you did equity crowdfunding? Forget it. What's your cap table look like? 1,000 people? I'm just making this up in your case. Forget it. There's nothing here for you. But apparently you did not encounter that.
Well, here's the thing. Before VirZoom, I spent a lot of time in the venture capital industry. And before that, so I spent, I'm an operating guy, systems, software engineering, product marketing, sales, and so forth in the high-tech industry for decades. Then I was the managing director of Osborne Capital. We had a very good run. We had 9 liquidity events out of 20 investments, sales to Cisco, Microsoft, Nortel, EMC. It was a really good outcome. And then I went to run one of our portfolio companies. So it was my first foray into being the CEO of a venture-backed company. And then I handed that off to a very experienced former Cisco CEO. And that's because it made sense to maximize shareholder value for me to hand it off to someone more experienced than me when the company was getting really big. And that turned out very well for investors. So I then went back into the venture industry. I worked for Trident Capital, which is a $2.3 billion fund out of Stamford, Connecticut. And then from there went to run VirZoom. VirZoom is kind of my way of applying everything that I've learned both in the technology industry and also in fundraising. And you might ask, so why didn't I just venture fund VirZoom?
Precisely.
Well, particularly with all the contacts I have right in the industry and my experience with it. And the answer is that venture capital is really good for certain kinds of companies in certain kinds of industries. If you are in a very well-established industry, like say, finance, SaaS-based, a SaaS company doing a version of something that 20 other people have done, but it's better. That's really good for VC because they're pattern matchers. They want to see this thing you're doing looks like this thing over here that was successful, and therefore we can kind of compare them. So, and VR is new, right? So now it's a wide open territory. Nobody really knew where it was going to go. So it's not that appealing to venture capitalists because there's no basis for evaluating the risk. And the other thing is, there's a lot of overhead involved in running a company that's VC backed. You have to manage them. When I was running Boosocket, I had 12 guys on my board from all the VCs I raised money from, and I was spending about half my time managing them. Right. And I want to manage my company. Now, the value they can add is as advisors if they have relevant, competencies in areas that you need. But I have this very deep bench of contacts I've developed over my career, and was able to put together an advisory board that's very strong. We have Mike Dornbrook, who's the COO at Harmonix back when they were cutting their massive deals with Activision and so forth, and helps me with contracts. And we have Tim Mertz, who's ran athletics for MIT and Harvard, has degrees in exercise science, helping us to understand, design principles of games to meet those requirements. So we have this very deep bench of extremely experienced advisors, and so we don't really need that part of the value of venture capital. Furthermore, I have philosophically, I just think that the Jobs Act was a really great thing for this country that made it possible for people who are not wealthy to participate in this asset class that has made so many other people wealthy.
Indeed, that is one of the reasons I'm talking about the equity crowdfunding that came out of the Jobs Act, that I'm so obsessed with it almost. I happen to be a serial entrepreneur with over 12 startups to my name, and this wasn't available for the most part until obviously 2016. And then I thought, my God, you can raise funds from the crowd on reasonable terms, and you're not only getting the funds, let's say minus 10% fee, give or take, depending on the platform, but you're also getting potential evangelists and or customers. What more could you possibly want?
If you're a B2C company like us selling to consumers, I'd say about a third of our investors are customers.
Oh,
who's better to evaluate your business in terms of your products and how you behave as a business in terms of support and policies and so forth than a customer, right? So they're really well in a really good position to make an evaluation of an investment, and many of them have. But the thing that I always hated about the rules, the so-called blue sky laws that governed the ability of people to invest in companies like VirZoom, is they were based on the presumption of, well, if you're rich, you must be smart, and if you're not rich, you're stupid. And that's not a very good assumption. People, there's a lot of really brilliant, smart people out there that have just simply decided not to dedicate their lives to making piles of money and have other better things to do, like, take care of their families and so forth. So, giving them the opportunity to participate according to their means, I think was a real breakthrough. And it was, by the way, probably the last piece of legislation that got broad bipartisan support in Congress. Everyone could agree on this idea because it's just a good idea.
Yeah, no, I totally agree. Personally, one of the reasons why I like equity crowdfunding is precisely because typical investment amounts are, let's say, $100 to $2,000. Now you might say, "Oh my God, $100! What a joke!" But the important part is precisely that it is not people's life savings in this case. In other words, they're not likely to, let's put it this way, 9 out of 10 startups fail, so your odds aren't so great. But you can identify with the startup, which is exactly what a lot of these supporters do. And so it is a very different game compared to the VC where you're looking for 100,000, a million, or whatever dollar checks.
I like the way that it's a heavily regulated industry, and the SEC and FINRA, and then you describe some of the rules that limit the amount of exposure that an individual investor can get. And I wish those applied. I mean, there's plenty of ways. You can invest in the public markets in the pink sheets and the penny stocks and so forth. And it's just essentially a free for all. The SEC, I think, near as I could tell, gave up on it. So you can lose tons of money there. Put out your half your life savings in there, and people lose money there all the time. It's unfortunate. But what I really like about our industry, about equity crowdfunding, is that it's very thoughtfully designed to make sure that investors do have an opportunity to make investments at a level that could produce meaningful returns, but can't get themselves into trouble, get over their skis, so to speak.
No, I totally agree with you. And I'm happy to say that I think the American government really did an outstanding job overall when it came to the rules for this new equity crowd. The whole point, what's the purpose of the SEC? To protect investors. Oh, okay. Now tell me, how are you going to protect an investor in a startup, in many cases, that has no meaningful revenue, profits? What the hell is that? Et cetera, et cetera. In other words, quite frankly, you're selling a dream and a vision, and there's value there, but not necessarily, strictly speaking, financially. In other words, the odds, quite frankly, are against the investors. But there is a lot of satisfaction to be had by saying, oh, that company that, in this case, devised the apps for the this, that, and the other, and so forth. Well, I'm one of the early investors, even if it was only a couple of $100, bragging-wise, I'd say.
Well, the idea that there's plenty of risk in the public markets as well, right? And there are also many, many companies with enormous valuations and no revenue. Yeah. There's one, I won't name it, but there's one in the drone industry that has a $4 billion valuation and generated $1 million of revenue last year.
Well, that's although truth
$500 million in expense
category.
So there's certainly plenty of ways to invest in risky ventures in the public, in publicly listed companies on New York Stock Exchange and NASDAQ. And then there's a lot of people would have thought, how could Peloton possibly fail? I mean, here's this high flying company, and I think its stock declined 90%. So there's from its peak, that story repeats over and over again. There's sure, you can lose your money if a company goes out of business, but if a company loses 90 and 99% of its share value, that's kind of the same thing. So yeah, there's nothing preventing people from putting a lot of money into those companies and without realizing that they're as risky as they are. What I like about the equity crowdfunding market is it's very upfront. It's like, look, things can happen, no matter, even to the most well-run company. My job, of course, is to make sure that we're always sufficiently funded that we can get to our next step. And for, our next, I would say that our next best opportunity to make sure that VirZoom is around for a long time and really succeeds is to begin to generate some really significant revenue off of, first, this new product that we just launched, which I think we have a serious opportunity to do. And then the next generation of products that we're working on, which I'm even more excited about, that use our new technology to create just an entirely new kind of application that no one has ever done before, that employs some concepts of some of the more successful apps on the Quest store. There's one that we're going to adopt some of what they learned from their design and from their business model. And this might surprise you, but this this one app has generated over $100 million in revenue over the last couple of years since its lifetime. So you can make real money in this industry.
Well, this is the beauty of it. In other words, unlike physical product, when you do software, as we both know, yes, it's difficult to create and perfect and so forth. But when you've done one or finished one and tested it and everything else, it doesn't cost you any more, in effect, to reproduce it. So,
the cost of goods is quite low.
I beg your pardon?
The cost of goods is very low.
Yes, exactly. So, in other words, the scalability, strictly speaking, is inherent. Doesn't mean that most of them do that, but at least it's there. And then it can most certainly be extremely profitable. So, let me ask you one last question because we're running out of time. As you probably are aware, Start Engine in particular has already created a secondary market. And the reason I'm bringing this up is precisely because, people who invest in equity crowdfunding campaigns, where's your liquidity? Well, if the company goes public in an IPO, good luck with that, or it gets acquired. And then what? Well, that's about it. Having a secondary market, at least theoretically, creates potential liquidity for investors that otherwise, quite frankly, don't have it. Is this something that you are contemplating, or at least considering, I should say, for your investors, in effect? In other words, to consider doing a listing on a secondary market like Start Engine. I think there may be one or two others by now.
There are a couple of them. I've studied them and keeping an eye on them. They need to become big enough and popular enough with investors in order for them to be liquid, right? So if you have a market with sellers and no buyers, that's not going to be too helpful. But but over time, absolutely, as more and more companies list in those marketplaces, and more investors learn about it and get comfortable trading on it. Within some number of years, it won't happen right away, but it will evolve to be a way that investors can take some of their money off the table, which is really what you want them to be able to do. If you're VC backed, by the way, if you're a partner in a VC firm, you have no control of anything. They put money into things. Here's your capital call. We just put money into this, and there's no way to get it back out again unless there's a liquidity event. But here, this is an opportunity for investors to be able to have that kind of flexibility.
Well, the good news is that the industry, since I started, I had one of the first 19 campaigns on the first day it went live. It was called NextRx. At that time, I didn't know how the industry was going to develop. Well, fast forward to today, i.e. 2024, by now, cumulatively, it's a multi-billion-dollar industry. It's kind of, my God. Sure. Who would have thought that could indeed go, quite frankly, relatively quickly? So the prospects in this case are pretty good.
Yeah, I'm a strong believer that this market in private equity that's being created by the Jobs Act, by these platforms, will be the new asset class. We're already seeing a pretty significant shift by investors who were previously limited investors in VC funds, choosing instead to invest through these equity crowdfunding platforms and directly through the dealmaker approach, the white label approach that we're taking.
Right.
Because they're thinking, well, I can do just as good a job as those guys figuring out what to invest in, and I'll have control over where my money goes. And I'm not paying some guy, a 2% management fee and 20% of carry of returns.
Right.
So, they're just deciding that it's just a better way for them to invest their money. So that is contributing to the really rapid growth of this industry. I think Dealmaker did $100 million in investments last year.
They came almost out of nowhere in comparative terms. I'm talking about, and It's very impressive. I mean, it is also very interesting to see the overall change in attitude towards the industry. I'm not necessarily the biggest fan of VCs, so I would say they've woken up to the fact that, here's startup X, they've already raised, let's say, successfully, let's say $1 million, just to take a number. If they, in addition, have reasonable traction, their MVP in place, etc., maybe this equity crowdfunding is not a disadvantage, again, using a special purpose vehicle, but maybe it's actually the exact opposite. It's maybe
There's two points I want to make on that. One is when we first started off, when my VC friend would say, "Why are you doing equity crowdfunding?" That's for funding companies that can't get venture capital. I'm like, no, it's for companies that can't, that want to connect with their customers, who want to sell equity to people who are qualified to judge the business, and without all the overhead that you take on when you're VC backed. And the other part of it, and so fast forward to now, and I've a number of good friends and contacts in the VC industry, and a lot of them these days, you'll notice this and that there's a lot of formerly VC backed companies now raising on these crowdfunding platforms, because the VCs are now saying, a portfolio company comes back and says, "I need to raise more money." They're like, "Why don't you go raise some money over on these crowdfunding platforms and stop coming back to us for money?" And so there's just you see a lot of that going on.
Let's face it, from a startup point of view, which is always where I'm coming from, you have or should have very sensible terms. In other words, the terms are, generally speaking, in favor of the startup. This only arguably can be justified by, just how much are you investing? $1,000? Give me a break, In other words, shareholders compared to certainly VCs are not getting such a good deal, but the risk is a different one anyway.
Well, they're different. The venture capital, the thing about VC, and again, I spent 10 years in the VC industry. Mm-hmm. It's a small number of people with a pool of capital, and you have to be very careful of how you invest, because every new investment is consuming your time.
Right.
And if it doesn't work out, you just wasted a lot of time and wasted a lot of money. And statistically, only 1 out of 10 of their investments pays off, which is not great, right? Mm-hmm. And that's for the average. I mean, the VCs at the top quintile do a lot better than that. Of course, the Anderson Horowitzes and those kinds of guys. But the vast majority of VCs, that's pretty much what they're looking at. So they have to be, in order to justify that level of risk, they have to get a super, super, super low price.
Right.
And the other thing they have to have, in the words of a friend of mine who's a managing general partner of a VC firm here in town, I want 3 things: control, control, and control. Board control, voting control, and I want a guy who can kind of, inside, keep an eye on things. And that's, that's understandable when you're putting, when you can't lose. You're effectively in a position where you can't lose. For crowdfunding investors, there isn't that. There's a different motivation. They want to see a good return on their investment, simply put. The same way they would as if they were investing in a public company in the public markets. And that's kind of it. And they might also have some connection with the mission of the company. So, for example, for us, we want to get people healthy. And if that resonates with people, that's another reason why they might want to invest.
That's exactly right. I mean, that's why we are doing Shark Tank, in the sense that, as we call it, Shark Tank for everyone, meaning you don't just get to watch, but the audience, if you will, gets to hit the button. Unfortunately, it's not quite as straightforward as that, but that's the concept. In other words, you can decide, no, you don't have to wait for the shark to invest. If you like the idea and the vision and the founders and the team and so forth, you hit the button. You can make the decision yourself. It may not be a big decision, but it doesn't matter. At least you're part of the process. And a lot of people, I think, find that to be very exciting.
Yeah, so, indeed.
Unfortunately, I'm afraid we're out of time. Thank you so much for coming on to Next Pitch TV. I thoroughly appreciate it. and we'll go ahead and get this published as soon as possible. And I wish you all the very best with your campaign.
Thank you so much for having me. I enjoyed it very much.
Thank you kindly. Have a great day. Bye-bye.
Bye.
Join Eric Janchen and VirZoom as they take your fitness routine to thrilling new heights, because the future of VR innovation is just one pedal away. To know more about the featured campaign, subscribe now to nextpitch.tv.